All right, so welcome once again for our weekly macro discussion. I think we have been trying to interpret market signals while I think a lot of things are happening in last few days. Last week when we talked about, we were again looking at making new highs. We were expecting NVIDIA earnings. The tech was still, leading the rally. And as it happened, I think we did see NVIDIA coming out with pretty good results. The earnings were pretty impressive, provided that they updated that they have not shipped anything to China from the H20 inventory. That is still hurting them because even though the news came out, and even somebody like Lutnick came and declared that licensing will be provided to NVIDIA. Their update was that they did not really get any license yet, and they have not shipped anything. On the other hand, the positive side news was that even the future, like I would say, the next quarter looked great, and they have disclosed that their estimates do not even include anything shipping to China. So in general, I think what does it tell us? What it tells us is that the AI boom is still here, the spending is still continuing. Specifically, the US hyperscalers are still committed. There is no slowdown. We are talking about, China is still a factor, so you will see NVIDIA react to that. And, it did not break out above its highs because it missed out on the opportunity, and people are still worried about that in terms of the China sales. So I think that's where we are. And as I have been telling that, because of all the rally behind us, like, what we have seen since April, or even still since the start of the year, I think if we hold in these areas, that itself is a successful market. So people who have been wondering why, Nvidia did not go break out above, I would say it did not crash more than 10%. That itself is a win for it, with all the negative news and all the rally behind us. Like, it was sitting on a huge rally. So I think overall, this was a great week for tech, I would say. And what happened today, I think that's what is moving the market a little more, is the PCE numbers. So it came out a little hotter than expected. I won't say it's a big deal because, and we will look through that. The big difference here is that the rate cut probabilities in the future, people are betting on the rate cut, that did not change, even with the higher PCE. And I think that's what is surprising, that the market reacted the way it did. So sometimes the options expiry can make it worse. So it will be interesting. Again, as I always say, that Friday moves are sometimes deceiving because of all the options expiry and so on. And we always look for what is the follow-up action on Monday. But I think in general, when I look at where things are, I would say that yes, there was some concern in the morning with PCE data coming in hot. And but I think right now, when let's look at the Fed probabilities, which people are tracking. So for the September, there are still a 84% probability, even after the PCE data, that there will be a rate cut. And the interesting part is that in the October meeting, people are predicting almost 44% for another rate cut. Oh, sorry, 48% for another rate cut. So what we are seeing here is basically that there is a back-to-back rate cut expectation building up, and that's what I think is showing up in the yields. If you look at, let's go look at quickly at the yield chart. And this is what I've been showing. I think last week also we talked about how the yields are dropping aggressively. Even like the 10-year yield is dropping, even with all the rate cuts projections. And if you look at some of the numbers in the 2-year yields and so on, they are heading down. So there was no negative reaction to that in bonds market to the PCE number. So I would say from the stock market perspective, it was more of a knee jerk. And yes, the market did drop, especially the Nasdaq did drop significantly. And I think that is a little bit disappointing because, as you know, that last week we were tracking about how the Nasdaq has yet to make the all-time high, while the SPX was breaking through, and it did break through actually yesterday after NVIDIA earnings. We were watching whether it will make new high. So I think SPX did make a new high, only by barely by, I would say, a few points, but 0.5% or so, but it did. So in general, what we are, again, I think nothing has changed much, to be frank, from last week when we talked about how Nasdaq has to follow up. The wider S&P is already catching up because of rate cut expectations, and now I think we are looking at whether tech can keep moving. So Nvidia was not at least it did not crash the market yet. And that's where we are today in terms of where we see this market playing. And then I think the other thing which we can look at is what are the next news in the tech world, right? What are the big caps? So of course, Apple is the next big one, which is another 10 days from now. They are expected to announce their new iPhones, and I think that's where we are seeing a little more of news flow expected in Apple. And as we have been talking about, that Apple is the stock which has not really reached its all-time high like other tech stocks. So there's a lot of room if market is, usually these triggers definitely bring attention to the stock, and we are seeing it's kind of reversing right now. So I think that's where we are on overall market. I don't have anything specific beyond what we discussed last week, where we did talk about the Jackson Hole pivot and the whole macro tailwinds. More importantly, I would say we keep tracking the, how the money supply is growing, and we saw some more push, like, in recent times, we are seeing this is usually the tailwind. This is what we expect as the one of the biggest reasons why asset prices go up, because as we have been discussing, there is almost double-digit percentage growth every year we are seeing in the money supplies across the world. And I think that is where I think we are still seeing the same macro. We are seeing the rate, as we talk about the cost of capital, which is the yields are coming down. So in general, the tailwind is still there for risk assets. There is nothing changing there. And I think we're just maybe a little tired where market was a little bit, in a continuous high mode with very small corrections. That's what is causing these kind of blips which happen today, and we have to watch out how this plays out further. So I'll stop here in terms of sharing, and we can talk a few more things we are discussing, and we can go from there. Any questions, please feel free to put it in chat, or you can unmute yourself. um, I think at the start of the call, there was this whole discussion around whether we are in a bubble, and some people, always predicting it. So, as I said, right, if just in the context of the whole market, when we look at AI trade, and in the context of AI, the NVDA earning, if you see the growth rates, we were discussing this for all access subscribers also in the Discord, like, how, and the growth gadget which went out. If you are the subscriber, you may have seen our detailed analysis. Nvidia has grown at, like, even this quarter 56%. They're guiding 54%, and this is all with a huge handicap of, not being able to ship to China, which is a multi-billion-dollar sales opportunity. Now, a company which is growing at, that rate year on year at that I know that a lot of people are concerned about only looking at one number, which is, oh, how can a 4.5 trillion company keep growing? But if you just forget about that, if you just look at, because when we talk about earning per share, when we talk about the valuations, even by the old standards, a company which is growing at, 54%, 56% quarter year on year, how do you define that it is too high valued at a forward PE of 35 or something? So I would say this is tough to even call out the top. Means I think a lot of people have been calling the top in AI trade, and I think this is exactly what we were discussing in All Access also. That if you have already read through that, in the sense that what is really happening right now, we are talking about Meta building a data center which is of the size of Manhattan. We have Microsoft and Google and all. They are buying any data center building, or if somebody has already hooked up data centers, they're making deals with those. Like, even the Bitcoin mining companies are now converting to AI because of the demand, and they are seeing some amazing amount of capital flowing into them. So what we are looking at right now is the race is still on. You can always debate whether it's sustainable, but at this moment, people are talking about, Virginia as a state has approved a nuclear fusion kind of a new energy modes. Like, people are just looking at all potential, cutting edge technology to generate more energy just to fuel this AI boom. So I don't think the spending is anywhere close to stopping. And the second part is we are going on a rate cut cycle, and so the cost of the capital is coming down. So what does usually that mean? That means that we are looking at a lot more investment opportunities. People will look for investing more. And the third part is, as we always have discussed, right? So I tie it up in the sense that with all the policy changes, the SLR ratios changing, making it easier for banks to go and expand the capital or the credit. All these things have been already been put in place by Trump administration. So if you combine these things, um, none of these things are pointing to, that we cannot be in a, if you really like calling it a bubble, then the bubble can be much bigger than this. I don't think this is, and there are any signs that there is a lack of capital, or this capital will stop flowing into this AI trade. Similarly, we don't know yet, whether there is any slowdown from any, like most of the countries, not just US, have been already cutting rates. So there is nobody who is talking about any kind of tightening or any kind of inflation concerns at this moment. So all those things are still, I would say, pretty much pointing to a macro tailwind, and that's where one has to look at that we are not seeing any signs where we should be concerned. So again, I will give it a moment before we jump into the other topic for discussing the generic market and specifically the stocks. If you have any questions, feel free to unmute or put your question in the chat.
Um, so Raman, I have a specific question about semiconductor stocks. You talked about NVIDIA. So Marvel, for example, fell today, and in general, we saw what's happening with Intel, with US government investments, etc. So do you have comments on other stocks other than NVIDIA, semi stocks?
Yeah, so I think overall there are certain things which are correlated. If you see, most of the semiconductor fell with NVIDIA, and again, I think we are seeing it as a general sector tailwind when we look at AI trade. Yeah, I've not looked specifically into Marvel or Intel or something, but in general, I think it's a question of whether this whole industry is going to continue seeing spending. In terms of, I think Marvel has a lot of scope in what is happening in the custom chip side and many other things. And also, I would say like Intel, I'm not following much because it's too small a stock for matter, and they don't have much of AI play. But in general, I would say the correlation exists. So when you say today market fell, unfortunately, everything is correlated. Money flow. When there are some, people take chips off their table, they just go and sell everything what they have. And usually, and also there is a lot of ETF impact, right? So like a lot of people invest into semiconductor, not as directly into Nvidia or directly into any stock. There's a lot of demand for these semiconductor indices like SMH or even the leveraged ones. A lot of people play that nowadays. So that creates some kind of a correlation automatically because a lot of money flows through that. And as we know that index investing, even from a SPX perspective, can impact all of these. So yeah, I think overall basic idea is very simple, right? So that all the if we forget the correlation, if we assume there is a lot of tailwind for the sector itself. So I think what we are going to see is that yes, Nvidias of the world and the Mag 7 as we call it, not just Nvidia, I would say even something like now Avago is counted into Mag 7 capabilities because it's pretty much out there in terms of market cap. So I would say all these 7 or 8 stocks, which are the top tech stocks, they usually move together. In fact, today we saw that market was trying to pick a few stocks like Apple or Google were probably outperforming rest of the things because they're also the ones which have not caught up to the fundamentals, right? They are still kind of been the laggards. So that also gives you an idea that it was more of a letting off the steam, what happened today in the market, where the most leveraged plays were correcting while the rotation is happening. Like we have been talking about how SPX is making new highs while Nasdaq is struggling because again, this is because of the wider market improving in anticipation of rate cuts. And you will see more and more laggards coming up and catching up to the leaders. The leaders are still the same, which we have been talking about, right? Which have direct correlation with the AI. So it is an AI market. Unfortunately, if means Intel or somebody, yes, there is a lot of news about what Trump administration is doing and all that. But to be frank, at fundamental levels, their Intel is not part of the AI boom, and that's what is we cannot predict what else means in terms of the semiconductor manufacturing and all the other potentials they have not lived up to. So I don't have any comments whether it really makes a difference to them on what's happening in the AI world.
Okay, thank you.
Any other questions, folks? Feel free to put in. Otherwise, we can jump on to the other topic, which is I think a lot of people have been sending me messages, and I think yes, it's concerning that Bitcoin has actually underperformed recent time. And let's look at the chart. We did share last time. So I think last week when we discussed, so I've removed that line. It used to be the previous all-time high around 112K. and we were taking support when we talked. And actually, as it happened, this week, last week, we dropped below that. So that is definitely a breakdown. It technically, it is kind of looking weak right now, but a lot of technical analysts are tracking this flag, which was formed last time, and we broke out here, and we are still taking some support in this area. And usually what happens is usually these breakout points and these, where there's a lot of consolidation last time, usually there's a lot of supply coming in, demand coming in there, because this becomes a huge accumulation point. But I think in terms of solid supports, yes, I think there is a risk of testing 200-day moving average, which is very common. We even did that. I think very close. We came very close to 200-day moving average kind of test earlier in June when we were breaking out. So I think this is more of a, I would say, usually the new supply comes in, and this is why I think if you are tracking more details, these are a couple of wallets, like big wallets, multi-billion-dollar wallets, which are moving right now. They are rotating into Ethereum. We did talk a little bit about how in the last week, you can go through the recording from last week of what is happening in the Ethereum and the altcoin world. And what happened here is that some of these big whales, they are manipulating the market by dumping billions of dollars on a Sunday. Like how it started was a Sunday big crash, and the reason being because the market was thin, and the kind of rumors are that this big wallet, they dumped it in the market in the thin liquidity, and they bought some kind of derivatives to benefit from the short. But in general, what we are trying to highlight is there is a multi-billion-dollar liquidity coming in, which is actually getting absorbed. This correction is in kind of not as huge as it used to be. We did discuss it even the last time when we consolidated and we dropped in, I think, March, April, and so on, that this cycle of Bitcoin is very different. Means the kind of supply we are seeing, the old wallets from 2012, 2014, actually liquidating is it never happened in last 2 or 3 cycles. So this is the first time we are seeing all those supplies coming in that is getting distributed. We are seeing ETF inflows coming. So I think this is going to happen, but the drops are not as severe as it used to be in the previous cycle. So we call it as, market is absorbing these inflows which are coming in. But yes, it is sensitive to, this was the biggest critics of Bitcoin also, that we had some really huge accumulation from the early miners of Bitcoin. And I would say for long-term perspective, it is healthy that those wallets are now liquidating and probably moving into, yeah, and again, it is going to get distributed. Now, what is really happening is, so usually we track this ETF inflows. So usually I watch out for those, right? So in last few days, we are seeing a decent amount of inflows. So while the market has been going down, so the ETF players like BlackRock and Fidelity of the world, they are able to still find buyers right now. Earlier, when we were at the top, there was a lot of selling happening. So probably these people are smart enough to know, and maybe they were hedging already by having the knowledge. So this is where I think there is always some insider stuff going on, where the market makers already know that there is a big sale order coming, and there was some front running of that. So the good news on Bitcoin is at least we can see these things. And but I think overall on the chart, what we are trying to highlight here is that this is not as damaging yet. But yes, definitely it's weaker below 112K versus last week where we were. So that's the status. And as we always say, right, means Bitcoin is a more of a long-term trend. It is the volatility is almost seen as a feature. It's not seen as a problem by most of the people who are playing it, whether it is the MicroStrategy of the world, or whether like even ourselves, we do a lot of options under our managed portfolios and in our for people who are in the paid subscription with our all access. So all these things are useful because the volatility gives you better risk management by selling options. But on the other hand, the question which I keep getting is it the top? Like, is it something which is like, has Bitcoin made the cycle top? Because we all know, if we are in this space, that this is whole halving cycle and the 4-year cycle. And yes, there have been the acceleration. Like if you just zoom out, I think we have seen pretty huge rally this time. And but if you look, this is exactly what I keep highlighting. Like if you look at this huge rally, this is a very small correction. So people get panicked because when you zoom in too much. So in general, I would say structurally, we always consider, in the technical analysis world, that if you are still trading above 200-day moving average, we are still doing good on a medium to long term basis. And as we saw in the previous corrections in this cycle, we have even tested below, and we have gone below 200-day moving average. So in worst case, yes, we can test 100K, and that's going to be another 10% drop. But I think we are not seeing any reversals yet on the chart or in terms of fundamentals. This is why we are tracking whether the flows have dried up, whether, even though there was a lot of selling in the middle of August, but it's coming back again. We are seeing people are buying back. We are able to see that there are some big wallets which are, moving money. So it is very much expected when the price appreciates that some people get tempted to sell. And this is what every cycle, every correction in this cycle we are seeing, that all this new supply gets absorbed without a lot of damage to the price. So which is encouraging. So, and again, I keep highlighting the what we discussed earlier, a few minutes back, like, that ultimately the macro is still the same, right? The rate cut cycle is starting, the money flow is still good, and the M2 money supply is still good. So all that we even posted on WhatsApp earlier today from the team, that how Bitcoin has always been correlated with the money supplies and the macro of the world. And that is not changing yet. So if we don't see that, or we don't see any other signs, we are not too worried. But again, as I said, like, it's not a easy space to be if you are new, because the price moves are bigger on the upside, as well as the corrections are always bigger in Bitcoin world. So you have to be ready for that if you are investor in this space. So any other questions, do let me know. And we have one more topic I think we wanted to talk about, is what are the next data points to watch, so we can move to that. If there's any question around Bitcoin and the crypto world, we can take them now. All right. So one more last chance and we can get going. Okay, so I think one more thing which I think I forgot to capture is the gold, I would say, because that's one more thing we have always looked at, even whether the fundamentally, see, gold has been correlated to money supply also in the old world, old money. And I think this is another interesting chart which we forgot to cover today, which is the gold is breaking out today. So if you remember, we have been waiting for this breakout for quite some time. We've been talking about the consolidation, and finally it's a big move now. So I think this was a news story today from our side when we are looking at our own charts. And I think this also confirms right now that market is still looking at, asset classes going up. And the impact of money, the macro is showing up in at least one asset class right now, while both SPX, Nasdaq, and the Bitcoin are still in the correction mode. Or I would say SPX is not, but Nasdaq is a little bit in correction mode because of not being able to break out all-time high. But I think gold is very close to breaking out on all-time high, and specifically because this consolidation has been going on for almost 4 months. This is something which is very crucial breakout, which we have been watching. So this is another good sign, I would say, for risk assets overall, when we are seeing some of these things improving in terms of technical levels and technical breakouts. All right, so I think I don't have anything else. If I would let it be an open discussion now, if anybody has any questions to ask. Um, Two things which I'm tracking now is, of course, the unemployment data and finally the FOMC meeting for September, which is, I think it is around middle of September, if I'm not wrong. I don't have the date in front of me. But basically, I think next 2 to 3 weeks, as we discussed, things to watch would be Apple iPhone launch and the reaction of the market. If that generates some excitement, Apple is a mega cap, which can help the tech stocks. Follow-up of today's PCE numbers, because even though it was a knee-jerk reaction, we don't know if this correction will sustain again. As we always say, right? Means the week Friday moves are big usually because of the morning PCE knee-jerk can create a lot of expiry issues, and there can be liquidations. Now, what we're talking about here is what are the factors which will be moving the market. I would say anticipation of Apple. We will see how Apple trades. We will watch out how the follow-up is for something like NVDA and so on. The critical factor here is that, of course, the China story will still be watched very carefully uh, on the how the H20 approvals go through, because that will really perk up NVIDIA. Again, the reason why these mega cap matter is because they're very huge caps, and they help overall the index investing, where if they break out, SPX makes new highs or Nasdaq makes new highs, and that helps the rest of the market also. And then, as I said, unemployment numbers will be critical, because if they support the rate cut theory, as I said, 25 basis point is more or less kind of baked in now in the market, where market is pricing in almost 85% probability. But I think if the unemployment looks worse, there will be calls for 50 basis point, or even if not a 50 basis point, maybe the October probabilities will start going up even more, because as we just discussed earlier in the call, the October probability right now is sitting at around 48% for another rate cut after September rate cut, and market will start looking at that data. And finally, as I said, the real FOMC meeting, that which is probably 3 weeks from now, that will really define what is the actual reaction of that to in the market. So these are a few factors to watch from a, I think, macro perspective. And as I said, most of the all existing policies are already favoring more money printing, more banks with the relaxed SLR, with the rate cut cycle almost starting. There's no reason for banks to not pump the money, right? Means banks purely care about making money. They are for-profit entities, and for them, if there is a rate cut on horizon, it makes more sense to pile up into long-term bonds or even medium-term bonds, and and once you pile up into them, you can collateralize them, you can issue more loans, and that's what fuels the economy. That's what fuels the overall risk assets and everything else. So that is what I think it's all about. Like, why people? So because some people may not understand the impact of rate cuts, but remember, the rate cuts are like, as you are planning for more and more rate cuts, that really creates this whole new cycle of M2 money, which is not necessarily driven by what Fed does, but what banks do or private banks do, and the credit availability becomes easier. Even the health of companies become better, because, as you know, that a lot of discussion was around all the non-tech companies or other companies who have been struggling to fund their operations, because they probably have refinance coming up from multi-year corporate loans which were financed at lower rates. So all the rate cuts and yields going down will help everybody in general, and that tailwind usually helps pick up the economy. So that's where I think the trickle down effect of that will be probably visible at some point. So market does see these rate cuts as very crucial in near term, because we have been on the pause mode for some time now. And as we always say, that we are in a restrictive environment based on the numbers we are talking about right now. Most of the companies which have been built in last 10 to 20 years, they are not used to 4% rates or 4.25% rates, because we have spent almost a decade in very low rates. So I think that's where everybody is under stress. People who rely on the credit markets to fund their operations, all that will get helped once the rate cut cycle starts. So I think that's where the optimism will start, and that's where I think we have the opportunity in the market that, again, going back to the starting point, which was a good question, I would say whether we are in a bubble. I think bubbles are not made when you are where capital price is coming down, and you have actual health improving. Maybe we are in a bubble. Maybe the fundamentals start justifying the valuations if the cost of the capital starts coming down. So it's a tailwind. Whether we really achieve good results out of it, that has to be seen. All right. So if there are no other questions, I will just hold in for a minute or two. But I think we are done for the day, and we can close the call. Let me know. I did see a comment here in the chat, which is silver. No, I think silver, actually, it's a good thing, let me say, because we have been bullish on silver. So silver usually has been, a kind of a multiplier effect on gold in past. This cycle of gold, I think, because it was sovereign accumulation, we did not see the same amount of excitement. But I think finally, just like gold is breaking out in the current move, I think today we did see silver really doing well. So let me just quickly open the chart. If you are because usually I track this ETF SLV, so it's basically the same thing as the silver price. So as you saw that this is the channel which we have been tracking, and the up channel was broken earlier in July, but it did not sustain, and now we are again seeing a breakout. So yes, I think silver is looking very healthy. And the only challenge is that silver is not performing the same way as in the previous gold bull runs. Like if you compare it with something like how gold has been really going up in last 2 years, silver has underperformed. And that is where I think we were always concerned that. But I think there is history says that silver has a lot to catch up on this gold rally. And if this breakout sustains this time, I think, yes, definitely looking promising. So it's a good question. I would say whether if you are invested in silver, I mean, we are very bullish in all access. If you are, we have quite a few silver miners. I think we have done like almost year to date, we have done 70-80% on some of the silver miners which are in our portfolio. So yeah, all those things are, I think, pretty positive right now for precious metal in general. And gold is not alone. I think silver and silver miners have done very well in this rally. And I think, as I said, like silver has a lot more to run up if we compare with historical data on based on the how much gold usually goes up, silver usually goes up faster and more. And another interesting thing is that silver usually goes up later in the cycle, in the later part of the gold run. So it matches with the history that silver can actually start running up very fast right now. So it's a pretty interesting investment. Again, disclaimer that we are not suggesting any investments here in this call. So please take your own risks and review with your advisors. But I think overall chart wise, yes, I like what is going on in silver, and just because of the history of correlation with gold bull runs. Any other questions? Feel free to enter in the chat, and we can take them now. Okay. All right, guys. So I think let's call it a day. I think it's great having all of you here for. And again, a quick comment on we have been discussing over the last few times. Do always look at your risks. I think that's what we always talk about. I know that there is a lot of news analysis, all that, which is very common in the market, which creates all these hypes, right? I mean, that's what their job is. So don't panic or don't react. If you react calmly, that's the most important thing. Hedge your portfolios, and I think that's most important part. I mean, there is no certainty in the market of how far we will go, but this is where we also recommend doing options and so on. So do keep talking to us if you have any interest in that. I have one quick question in chat here, which I can take. Is Apple going to buy Perplexity? To be frank, I don't know. Means I'm not I don't have any inside information on this. But my comment about Apple is very simple: that they have a huge distribution. Even though market is pricing in that they failed in their AI, investments internally, and they have not done anything great about it. Apple is a huge brand. They can do partnership with anybody. Like they failed in search, they failed in maps, they failed in a lot of other things before. So I'm not too worried about that. Means whether they buy Perplexity, whether they do a deal with the OpenAI, whether they do a deal with the Google on Gemini. All these rumors are out there. I don't have any specific knowledge to comment about that, but what I understand is that the distribution which Apple has, almost every AI company who is building the models or building something like either a browser or anything, they will all be very happy to get into iPhones. And Apple is the decision maker here. They can choose anything they want because they control the brand, they control what people really buy. So I think Apple is in a very strong position, which people are not really pricing in terms of the distribution. That they have the distribution, they control the distribution. So I don't think they will fail at AI in general. It's a matter of who do they partner with. And yes, Perplexity sounds like a great partnership if they do, or if they buy them out. I don't know what will be the future of that. And I think this is where the opportunity lies also, right, for Apple. Like if they launch, means people are very disappointed that iPhone 16 Pro was supposed to be a big AI launch which failed. And this is the opportunity for them, right? Means people are watching very carefully what Apple announces in the AI domain in the event. I think it's on September 9th, if I'm not wrong. And that will be probably a turning point for them in terms of how they justify, because that has been the criticism of Apple since last year, that they failed at AI, even though they promised all the Apple Intelligence and so on. And I think I'm also waiting and watching of who do they partner with and what comes out in this new launch. Right. So I think we'll just call it a day. Thanks a lot for everyone for joining, and it was have a great weekend. It's a long weekend, so Monday markets are off, so we'll be watching how market reacts from Tuesday onwards. So have a great long weekend. Talk to you next week. Bye bye.